Fox Business Alert, everyone. House Majority Leader Steny Hoyer is saying the House may vote as early as Thursday on the bankruptcy mortgage measure. That's that controversial legislation. One side saying that it will help the housing market finally recover by stopping all these foreclosures. The other side says, sorry, Charlie, can't pay your mortgage, you lose your home. Simple as that. Dani Babb, author of The Accidental Landlord, is back to weigh in on this. Okay, we've debated this before.
Yeah.
We debated it on Sean Hannity's show as well. So it's going to finally come to fruition. You think it's going to pass on Thursday if they do vote?
I think it will pass, and I still hold my position that this is generally bad for the market, absolutely.
But see, that's the thing that, people are saying, well, okay, bad because it's going to drive mortgage costs for other people. Banks won't lend out mortgages. Well, if they don't lend, they're not going to be a bank for very long. So there goes that argument. And the second thing is that if you file for bankruptcy, they wipe out your student loans, they wipe out your credit cards, they wipe out your second mortgage or vacation home mortgage. Why not your first mortgage? What's the difference?
Well, the first question, they are getting money. They're getting money from people who are actually paying their bills, and they're getting money from the government. So
Banks.
So and their reserves are actually at an all-time high. So I think that's probably not going to be an issue. But with regard to people and the ability to modify their mortgages, I think the real problem isn't so much that they can do it in other areas. It's that the bank has a loan, and let's say it's for $1 million home.
Right.
In this case, the bankruptcy judge, if the homeowner and the bank work out something and they knock down the principal to $500 grand, that's one thing. Now the bank is taking on a specific risk. They know what that risk is. A BK judge can come in here and say, you know what, he or she can only afford $100 grand. I'm going to knock that mortgage payment, that balance to $100,000. Now the banks don't know what sort of assets they have on the books.
Well, there has to be some type of guidance there where it's not ridiculous like that. And if a judge does do that, that's ridiculous.
Absolutely.
Let's talk about a lot of things going on in housing, folks. Did you hear about this? That Citigroup came out today and they said that they're going to, anyone who's facing foreclosure, basically who's at least 60 days late on their mortgage and you've lost your job, Citigroup will lower your mortgage to about $500 a month just for 3 months. To try to work things out. Good or bad idea?
This is excellent. This is the free market doing what it needs to do. Citibank is taking a calculated risk here. They know how many people this is going to potentially affect. They know what the existing average balance is, or average payment. It's about $750 a month on average.
Right.
So taking maybe a $250 a month loss for a specific period of time. They are proactive. They're being very proactive with consumers, and so is Chase, going after these people who could potentially become delinquent. This is the type of thing we need.
And this is Citi Mortgage. You have to have your mortgage owned and serviced by Citi Mortgage, and it applies to loans of $417,500 or lower. So, look into that, folks, if you're having trouble. We reported yesterday that the personal savings rate has jumped to 5% in January, the highest level in nearly, 5 years. People are saving money because they're worried about their jobs. That's a good thing. On the other hand, the government, to spur the economy, is doing this $200 billion consumer credit program. Folks, you'll hear us throw this term around, the term asset-backed securities loan facility. It's a mouthful. But they're encouraging us to take on more debt, Dani.
They are. That's completely insane. Well, they're taking on more debt, so maybe they just want to share the pain. But, this requires the Fed to buy everything from credit cards, auto loans, student loans, you name it, or it doesn't require them, but it allows them to do that.
Right.
And so we don't know what these assets are valued at either. So we know that the delinquencies, for example, on credit cards are rising every single month. I think they're around 8% right now. That's huge. So if that goes to 12, again, it's a situation where we don't know what something's worth.
But herein lies, let's wrap quickly, herein lies the dilemma in the fact that they're saying, okay, well, consumer spending accounts for 2/3 of our economy. Yeah. The credit markets aren't working, so the government has to step in. But you don't like the government stepping in.
Absolutely not. And people, if they need to save right now, you've got to do what's best for your family. I'm sorry, but that's number one priority.
Forget the big economy.
Forget the bigger picture. It's going to work itself out.
Dani Babb, you wouldn't realize that we disagree on so many things because we're so cordial. All right, thanks so much. Good to see you.